Hello traders and welcome to another video review. Today is Monday, last day of January 2022. Let's start with the Forex calendar to see what is going on the financial markets. As you can see, the overnight data has not been very important. We got some data from the New Zealand, from Japan. As you can see, where consumer confidence is dropping to the levels below the last reading, 59.1 versus 56.7. And the housing starts are going lower as well. During the London session, we don't have too many data scheduled for release today. The key event is revised GDP data from the Eurozone scheduled for release at 11 o'clock. Those data are for the fourth quarter, and the market participants are expecting a drop, significant drop from 2.2% to 0.4%. However, on the yearly basis, there is still a nice increase from 3.9% to 4.7% even with this data. So it will be very interesting to see how the euro dollar will react on this data. At 2 o'clock we got the CPI data from Germany. The market participants expect a drop on the CPI from 0.5% to minus 0.2%. The similar situation is with the harmonized CPI. The drop is even deeper from 0.3% to minus 0.4%. New York session doesn't look too much busy as well. Data from Canada are scheduled for release 2:30 in form of the industrial product price index and raw materials price index. Some leading indicators from China are scheduled for release at 3 p.m. and data from the US. Chicago Purchasing Managers Index at 3:45. Then the speech from the FOMC member Esther George, and then of course we got some loan officer survey. That's everything for the New York session. Last data, as you can see, are from the Australia, the AAG manufacturing index and the trade balance together with the PMI manufacturing data. Those data don't have too much impact on the markets anyway. So the situation on the calendar is clear. Not too many things is going on today, but we will definitely see what is going on right now on the US dollar. The US dollar index on a daily time frame chart has been rallying, and this is so far a three-wave rally. We broke above the last high at 96.92, made a new high at 97.41, and this, as you can see, is a pin bar candle. Daily pin bar candle in this place informs the traders that there is a potential reversal coming in form of a correction or a pullback. So the next targets for bears for this pullback, as you can see, we almost started the pullback or correction, is the level of the previous high 96.92 and the level of 96.61, which is the technical support. We are still trading inside of the channel, and the target for bulls on the other hand is seen at 97.77 and 97.70, which is the 61% extension of the last wave down. So this is very interesting situation here. Momentum is strong. The highest level was 68 points, so that's a very good reading. Right now we are pointing to the downside because the pullback has started, but it looks like we have some room to cover before any meaningful correction will come. The last correction on the US dollar index, as you can see, where, let's say, from here to here, at least 2.41%. So right now, if we will have any correction bigger than 2.41%, that means this would be some sort of the key correction, and down move will not be a part of the up move anymore. So that's the US dollar index. Let's take a look at majors. We are going to start with the euro dollar. Euro dollar is behaving just as expected after a failed attempt to rally and inability to break above 1.1501, which is the key technical resistance. The market broke below the short time trend line and went straight down towards 1.1167, which is long-term technical support. Very, very important. During the sell-off, the low was made at let me just take a look, 1.1121, which is of course 41 pips below the technical support. So we can say that this technical support is violated. However, there should be some sort of the reaction to the upside, so we should expect another pullback, this time to the upside. So where are the technical resistance levels on a daily time frame chart? Let me just zoom in a little bit more. The technical resistance is seen at 1.1273 and then at 1.1225. Those are the technical resistance, and of course those two levels, 1.1153, 1.1167, are now the technical resistance for the short-term traders. For the long-term traders, they might say the price is hovering around this level. However, as you can see, the daily time frame chart down candle from the 27th of the January closed below the 1.1152, which is clearly bearish clue for all of the traders. So please keep an eye on this development. What is going on the British pound? The British pound is behaving just according to our plan. However, the down move is a little bit deeper than expected. The British pound broke below the level of 1.3550. Now this level will be of course the technical resistance for price, but tested the 1.3353. So this is still the technical support for this market, and we should expect now the continuation of the up move towards the recent high. Why? Because this recent correction, if we measure the Fibonacci retracement of the last move up, as you can see, almost bounced from 61%. 61% of the Fibonacci retracement is located at 1.3384. The low was made at 1.3357, so that's about 25 pips lower, because there is some sort of the technical support here. That's why we got this 1, 2, 3, 4, 5. Well, we got this 5-wave move to the downside. So to be honest, I would rather see this up move here as some sort of the market pullback or correction to the upside. And now please keep an eye on 1.3515, and only if this level is violated and then 1.3568 and 1.3605 is violated, then we can say, okay, the market is going back to the uptrend and the highs are in danger. If those levels are not violated, we might extend lower, and that would mean we are back to the channel. We are now back to the channel, so any breakout of the channel will be considered bullish. If not, we might be going lower on the British pound. So please keep an eye on the current levels and to see what the market is planning to do with those levels and how these levels will be played out. I think we should take a look at the crude oil as well, because of the current situation on this market. As you can see, what do we have here? We have a 5-wave advance to the upside, and recently we made the wave 4. The wave 4 was made somewhere here. So right now, let me just remove this. There you go. This might be considered as the wave 4, and as I said, we might be seeing wave 5 to the upside. There is still some room for the wave 5 because the target might be at 91.28. This is a technical resistance, and the market participants might consider this level as interesting price target. However, so far the highs of the wave 3, 87.91, has not been clearly violated. We got these two pin bars here, but there is no confirmation of the down move, so there is still a chance that this wave 4 will develop into like a triangle or something, but it looks like right now we are very close to the recent swing high and might break this high anytime soon, especially because this momentum is still at the level of 70, which is very strong daily momentum. So wave 5 might be in progress. And last but not least, let's take a look at some cryptocurrencies. We are going to take a look at Bitcoin. The Bitcoin is the market that is very technical right now, and the market doesn't want to move out of this channel. And the breakout attempt, it ends up with the increased activity of the bears that are pushing the price even lower. The current low is at the level of 52,905, and as you can see, during the weekend we couldn't break out of the channel. So our scenario of the down move towards the key technical support 30,196, 28,964 is still active. Only if this level is violated, then we can say that the market is clearly in a multi-year downtrend. If this level is not violated and the market breaks out of this channel, then of course might be immediately capped at 39,540 or 41,188. This is the key supply zone. Without breakout above this zone, there is no rally on a Bitcoin possible. So please keep an eye for the channel breakout, and then of course for the test of the supply zone on Bitcoin. If there is no breakout, we will follow the arrow towards the lower levels. So that's my analysis for today. Thank you very much for watching, and I hope I see you guys next time. So take care and bye bye.